Happy Monday, traders, and welcome to a fresh week in markets. Okay, so last Friday we did have some important economic data out of the US, and that was PCE August, the monthly inflation data, which is the Fed's preferred inflation gauge. Now, the core PCE was expected to come out year on year around 2.9%. But there was some forecasts in the market and some worries that potentially it might come out 3% or a touch higher. But anyway, on Friday night, that actually did come out at 2.9%. So as expected, market did breathe a big sigh of relief. Now, how did the market react to this? So the most important market when we have inflation data to watch is obviously what happens in the US bond market. Now, the US bond market, ever since the Fed cut rates, has only gone one way. Yields have gone up. So US 10-year yields, which dipped momentarily sub 4% just before, during the last FOMC, it's gone all the way back up 20 basis points to 4.2%. Now, on the back of this data, the bond yields barely moved. So, but one of the things is that obviously markets worried that we'd get a spike higher, continuation of those bond yields. That certainly didn't happen. So we've got those US 10 years still sitting around about, I think they closed 4.17%, 4.17. Equity markets, yes, breathed a sigh of relief, the fact that those bond yields did not go up. So we saw S&P and NASDAQ positive on Friday to close the week, up around about 0.5%. So certainly not big moves, but those US equities are super close to record highs, so still trading at very, very elevated levels. So obviously, we've been talking about this a lot, bull market. Now, for the currency market has been following what has been happening in US bond yields. So in the last few weeks, when those US bond yields have been going back up, the US dollar has rallied with it. And the US dollar has been back on fire, especially some of the majors like dollar yen pushing back up to 150. Can you believe it? And euro smashed back down, testing that 120, down to sub 117. So we saw some big moves in the US dollar going into this PCE inflation data on Friday. But with that coming out as expected and no change in bond yields, we saw a pretty subdued reaction in the currency market. But one thing is that the US dollar stopped going up. Look, one currency pair that looks a standout still is Aussie. Aussie has been smoked all the way from 67 cents down sub 65 and a half. With what is obviously still going on with risk, and risk is still very, very buoyant. And we are coming down into some very good technical support areas. So I'd be very surprised to see Aussie sell off further, especially sub 65 cents. So, again, getting pretty close to some very rock solid support. And I think it would really take a big risk off move for that Aussie to go sub 65 cents. So if you don't think that's coming, bias is probably buying Aussie around current levels. Now, precious metals, they have been absolutely on fire, biggest bull market in the markets so far this year. Gold had a great close on Friday, posted data around that 37.60 area. The record highs there are up towards 3,800, 37.91. So look, we are very close to a push to record highs, a break of potentially 3,800. Is it realistic? The way the gold is trading, 100% could happen today. But silver, that is the one that is even outperforming gold. Year to date, that is now up over 60%. Silver had a fantastic daily and a weekly close above $46, so new fresh 14-year highs. And the high on Friday, it traded up towards 46.5. So it has been the biggest standout in global markets. A lot of the silver bulls getting super excited. They've been super patient on silver. Look, obviously the first target that they're looking for is $50, which is a record highs for silver. We are not far away from that. That could happen very quickly. Sentiment now is getting very bullish. And a lot of retail really has missed out on this move, so there could be some FOMO that comes in at some stage. But further out, the silver bulls, and we've said this before, they're not looking for $50 targets. They're looking for triple-digit targets. So there could still be a lot of juice left in long silver. But look, it is volatile. It does give you opportunities to get in on dips, and I'd imagine that any sort of retracements may be short-lived, and there's going to be a lot of buyers waiting to get on board this train, but certainly a huge standout. Okay, in the week ahead, not a hell of a lot going on, but yes, tomorrow locally here in Australia we do have an RBA meeting. Look, in the last 2 months we have seen headline monthly inflation go from 2.1% to 3%. RBA are not cutting rates tomorrow, no chance of that, so expect the cash rate to stay on hold at 3.6%. It could be a hawkish hold as well, that's probably the risk, but certainly market still does want more cuts from the RBA, and looking at the November meeting for that on Melbourne Cup Day. But look, what is going to decide that is going to be third quarter inflation data that comes out in October, so we've still got a few weeks to wait for that. But certainly anyway, tomorrow I'd imagine that we're going to see, potentially RBA 100% on hold, but potentially hawkish hold, and if that happens, again, it's going to be good for Aussie, so another reason maybe to be a long Aussie going into that meeting tomorrow. But end of the week is when we have fresh month, October, and first Friday of every month we have US employment data, non-farm payrolls. So really, whatever happens this week means probably nothing until we get this number. It is the reason why the Fed is cutting rates, and so obviously, if we continue to get softer data in employment, we're going to continue to see the market confident of more Fed rate cuts. Market's expecting their headline of around 39,000, unemployment rate to stay stable around 4.3%. Look, good luck with your trades this week, but look, at the end of the week, this is what matters, employment data. Good luck.